Hello, everybody, and welcome back to the Dash Trader Newsroom. Markets make new highs on the announcement of the Japan trade deal. New home sales drop as prices also hit new highs. But what comes next? My name is Michael DeJoy. I'm the Director of Educational Services here with Dash Trader, joined by my co-host, Jill Molandrino of Global Markets Reporter with Nasdaq. Jill, how are you?
Doing well, Mike. Thanks for having me.
I mean, it's summer, but it's not slowing down at all. I mean, markets have broken out to new highs, certainly not a sell in May and go away year. Trump administration announces a trade deal with Japan. Just from reading the headlines, tariffs are set at 15%, but there's a little bit more to it than that. Also, Japan has agreed to invest $550 billion in the U.S. Can you give us a little bit of color on what this trade deal actually is, and what the ramifications for the U.S. economy are?
Yeah, well, of course, now that we're starting to see some clarity around the trade deals and only 15% with Japan and their reciprocal, I think it was somewhat of a sigh of relief. You also have to include that the president also said that the U.S. is meeting with European officials to push to a trade deal with the EU as well. So those are two key trading blocks for us. So getting some clarity and closing out the uncertainty there is going to help boost U.S. equity prices, particularly if the U.S. and the EU have a deal that echoes the U.S. and Japan. So it's a little bit too early to say if it's because of earnings season or not. We really haven't gotten into the thick of it yet. A lot of these mega cap names have yet to report. I think a big tell is going to be what comes out of Alphabet and Tesla after the close today. They're really going to be like the first reports of earnings season out of the mega cap tech sector. I'm not quite sure expectations are that lofty for Tesla, and those reasons are widely known. And Alphabet, I'm going to be curious to see how their AI strategy is playing out and its impact to search.
So I mean, so far we've seen Great Britain coming in at 10% tariffs, which is basically our closest ally. Now we have Japan coming in at 15% with further investment in the United States, kind of bringing some production back to the U.S. The EU, somewhere, I guess, probably similar to Japan, 15 to 20% is what everybody is expecting. So we're starting to see a pattern now of the kind of rollout of tariffs. And on that note, we have a lot of things going on here in our domestic market as well. I mean, we have new home prices in the United States and the USA hitting all-time highs, but also we see a slowing of new home sales. So new home sales have hit a record low. Now, in past recessions and economic slowdowns, we have seen this kind of pattern where there's either high prices or a significant drop in sales. I mean, the economy still seems, by all indications, it still seems to be raging here. I mean, markets are hitting new highs. I mean, what would be the indicator that we would have some, kind of downside in the economy in the near term?
What's so interesting is the dichotomy where you have new home prices hitting an all-time high. Meanwhile, home sales are hitting a record low. And as you know, with real estate, it depends on comps, right? And what's sold within your neighborhood and relativity of homes. There has been such an increase in home prices that perhaps those comps haven't caught up with haven't caught up with the reality of the affordability situation. So if you have it where you live in a neighborhood of 10 homes and the last couple of homes sold for $1 million, you put yours up for that because that's what comps suggest. Your house might be sitting on the market far longer than it typically would have because people are priced out of the market. I'm not sure 25, 50 bips is going to make that much of a difference, although I will tell you my savings rates continue to go. I just got one from American Express Savings today that it's gone down, although I haven't seen any movements in rates. But I'm not quite sure if 25, 50 basis points is going to move the needle. that much.
Mm-hmm.
As it relates to affordability, you have to remember too that insurance costs have gone up significantly, as have taxes in many areas as well. So,
Mm-hmm.
meanwhile, they're sitting all-time highs because that's what comps suggest, but they're not moving. You can price it wherever you want, right? But if you can't move it, it's almost like you don't recognize a profit until you sell it.
Yeah, absolutely. It's like money that's not really accessible, but it's, it's the high perceived value on paper. I mean, I
Mhm.
think a lot of this has to do with this, what we've, you and I have been talking about for a while. I mean, real estate is something real. It's in the name. And, there's weakness. The US dollar has had one of its weakest years to date. I mean, it's been incredibly weak against cryptocurrencies, against gold. The market is also up partially on a weak dollar. So it might have some relation to the all-time high in real estate prices, which are also a very tangible real asset. So if the dollar weakens, real estate prices tend to go up, as does the stock market, as does crypto, as does gold, all the things that the dollar is denominated in. So that was just
Yeah.
one of the things that that I had noticed, is that we have this kind of reoccurring trend that that a lot of assets are kind of very high valuations due to this kind of really
Hmm.
almost historic weakness in the dollar this year.
Yeah. I would say, as it relates to the housing market, though, I'm not sure that the lower dollar has as much of an impact. The numbers that have come out as well, most of these contracts were likely signed in April and May, when the average on the 30-year was just above 7%. And I don't think it ever dipped low, like 6.8, 6.7%. So the higher mortgage rates, they're just causing home sales to um, remain stuck, right? So you had such a massive run in home prices, and with the rates where they are, it's just they're just stuck.
Yeah, yeah. I mean, that certainly could be a factor. So let me just get. I mean, obviously we haven't really got the meat of earnings season yet, but we've had a couple of earnings come out so far. Obviously we got two of the big ones coming out tonight. What have you seen from the companies that have released results so far? What has been the big trends as far as this earnings season goes thus far?
I would say it's a little bit too early to discern trends. I mean, the banks reported. I don't really think, perhaps with their commentary on the quality of consumer credit, but we haven't really seen the big tech companies they start reporting tonight. We haven't seen the really key consumer companies report. So I haven't been able to discern anything thus far. Were you hearing anything about comments on tariffs, the strength of the consumer? Anything where you can aggregate a theme at this point. I think over the next 2 to 3 weeks, that's when we'll be able to make that call. But I mean, there's really nothing that has stood out in terms of a theme. My sense is companies will most likely err on caution, um, and either remain where they are for full year until there's more visibility into that. But I don't. I wouldn't. I'd be surprised if you saw a lot of beats and raises. Just you don't almost hedge yourself there, if you will.
Yeah. And you obviously, we've had this kind of insane, not insane, but certainly good if you're in the long side of crypto, as I
Yeah.
know you and I have both, been pretty bullish on crypto. But we've seen this tremendous move in Bitcoin and really the entire crypto market. It starts in Bitcoin, spreads to Ethereum, then goes to all the ERC20 tokens, and then spreads
Mhm.
to well, I guess I hate to use this term, but the shit coins,
Yeah.
it spreads to them, and then it pretty much goes full circle. But we've seen this breakout to new highs on Bitcoin, Ethereum, as well as the big names like Link and
Mm-hmm. I have
Lumen,
some link. Yeah.
Stellar, and was the other one that the XRP,
Yep.
Ripple.
Ripple.
We've seen this ripple effect through the crypto market. What is the current situation of the crypto legislation that was the catalyst, but
Oh,
what's actually
100%.
happened?
Yeah, 100%. It was the catalyst. I mean, nothing has been signed in formally yet, but the fact of the matter is we're starting to understand what those operating guardrails look like. I think just like with the equity market, when you start to see broadening out of where capital is being allocated, so it's not just a Bitcoin story. I think the marketplace is understanding the applications of the other coins and the underlying infrastructure, which is why you're seeing moves in names like, Link, um, Ethereum. They all have their different types of use cases, but these are the names that you would equate to with the actual infrastructure of the ecosystem. So I think
Yeah,
that's important to recognize. And I think we've said this for a number of years. You can introduce all the ETF products you want, all the exotic products you want, until there is progress with US, you know, regulatory formation. That's the actual catalyst, right? Because
yeah,
you understand how you can operate in the environment. Coinbase has been through, what Robinhood has been through, as those companies were maturing and understanding how or what guardrails they need to operate under. So this is huge. This
yeah.
is, I mean, Mike, we're even seeing it since the progress has been made over the past month or two. The amount of press releases I get with crypto adjacent companies getting massive investments in even early rounds, and the amount of pitches that I'm getting for people to come on the show and publicly talk about um, legislation is nonstop. For prior to, it was a little bit radio silent, if you will, and the floodgates have opened certainly since Crypto Week last week.
So I mean, you think that this is, I mean, that it looks like we're going to get some kind of legislative clarity in the very near
I think
future.
we will, because it has bipartisan support as well. And if you
Yeah,
think about it through the lens of investment in the US, as more channels are opened for overseas investors to have our markets more accessible, um, I think the administration understands that. I think it's also understanding practical applications of, and the use cases are becoming more diversified. I think, at least the guests that have been on my show, the narrative really has been that whether it's treasury strategies, whether it's stable coins, tokenization of everything, we're witnessing how the global capital markets are evolving to a digitized infrastructure. Yep.
that's great. No, that's excellent. Thank you so much as
You got
always,
it.
Jill.
All right. Thanks, Mike.
Fantastic updates, keeping us up to speed on everything related to earnings and crypto. Until next time, Jill, enjoy your
Thank
summer.
you. Take care. See ya.
All right. Let's try to jump to the charts and take a look at some of the charts. All right, so let me just bring up the charts. Let's see how Tesla is responding, as Tesla is the big name. This is our Dash Trader software. Just going to bring up our daily chart, TSLA. All right, so Tesla has made a run up for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days into what looks like resistance. They made an announcement, which is a little bit strange, of a 24-hour Tesla diner. So they're certainly branching out into new things. But from a technical perspective, it could be a bull flag, or rather a bull pennant. Price is above the 10 and the 20 period moving average. And we also have, I mean, that is a bullish pattern back up to the 440 prior highs area. Let's take a look at Google, because Google also, Alphabet. Alphabet also has made a tremendous earning run. So as Jill said, Tesla and Alphabet are going to be the bellwethers here. Netflix certainly not performing as well as it usually does. It's kind of crossed under its moving averages. It's kind of on its own page as far as one of the stocks of the Magnificent Seven go. So that is Netflix. We got Meta. Meta is also kind of tangled in its moving averages, but they got a little bit of time until earnings. Certainly not running at the moment, but certainly looking good overall. But it is below its 10 and 20 period moving average. Take a look at Apple, because Apple had been very weak, but that picture has changed. It has an ascending triangle forming on its daily chart, which could indicate a possible break higher. So Apple looking like it, you know, might be breaking out to the upside. So finally, I mean, Apple has been in the dumps for quite some time. Just going to look at some of the American stocks like Ford, manufacturing companies, GE. GE at all, really record highs, in an uptrending pattern. Let's see what else we got. Let's look at some of the banks that have already announced earnings. JP Morgan also at record highs, breaking out to the upside. Citibank also, there's an old saying on Wall Street that if financials are strong, even BAC, really the financials are indicating that the market should be going higher. So really we see strength in the broader markets. Nasdaq is at an all-time high. SPY is breaking out to an all-time high with this Japan deal. And even the Dow Jones has broken out above its prior high, and it kind of has a bull flag formation going higher. So really markets looking bullish across the board. But that could have something to do with the fact that the dollar has been so tremendously weak, and certainly has gotten weaker with the passing of the big beautiful bill, which deficit spending does tend to lead to weakness in the dollar. The gold is at all-time highs. SLV at an all-time high. So we're certainly seeing all those inverse relationships, those dollar inverses, coming into play here. So on that note, I'm going to try to wrap things up by saying stay up to date with all things gas by signing up to our monthly newsletter and emails. Fill out the form at the bottom of our webpage at www.dastrader.com. Subscribe to our YouTube channel, Dash Trader TV, and our Dash Newsroom reminders, and certainly follow us on social media, LinkedIn, Twitter, Facebook, and Instagram. Thank you very much. Enjoy your summer and trade well, everybody.